Good day, everyone, and welcome back to First Bank's Wealth Management Market Commentary video series. My name is Todd, Executive Vice President and Managing Director of First Bank's Wealth Management Group. As I record this video, the U.S. stock market is experiencing a major pullback. In fact, it's the first major pullback in over 400 days, or a little more than a year. Most consider a pullback to be defined as a market decrease of 5%. Some market strategists are suggesting that the long bull market, which is approximately at 9 years, is finally coming to an end. First the pullback, then the correction, which is a market decline of 10% or more, and eventually a bear market, which is a decline of 20% or more. I certainly believe that a correction is possible, even probable. We know with certainty that there will eventually be a correction. We are long overdue for one. Our last correction started in January of 2016. That's over 2 years ago. When we study history, we know that the stock market experiences a correction on average once per year. So what is our advice to investors given the current market backdrop? And notice I said investors, not traders. Do not sell. Don't even think about selling. Market timing is for suckers. Why? Not only do you have to be right about when you get out, you have to be right about when you get back in. That is extremely difficult to do. I want you to be patient. Use any major sell-off as an opportunity to rebalance. Rebalancing your portfolio forces you to buy low and to sell high. A market sell-off is also a good opportunity to add to positions that you really love. Would you buy a first-class ticket for a coach ticket price? Of course you would. We don't think time is up for this market. Corporate earnings will continue to be strong. Tax savings for corporations and individuals are just getting started. Wages are growing for employees. In fact, 23% of companies in the U.S. have indicated they will provide their workers a pay raise, the highest reading in 17 years. Housing is strong, consumer debt relative to assets remain reasonable, and interest rates, while increasing, remain far below historical averages. If you do anything, please check your asset allocation. 94% of investment performance is based on asset allocation. Investors should be broadly diversified. 40% of your equity allocation should be outside of the U.S. Also, investors should have exposure to alternatives such as private equity, private debt, and private real estate. As we always say, there is a place for bonds in a portfolio. Bonds do three things. 1, they help get you out of jail. 2, they pay you interest. And 3, they reduce volatility, which helps against declines in equity prices. So to sum up, a correction is eventually coming. When it does, don't panic. It will come, and shortly thereafter, it will go. Don't attempt to trade the market's ups and downs. Stay disciplined and stay invested. Thanks for watching, and if you have questions, comments, or ideas for future topics, please email me at gene.todd@fbol.com. See you next time.